Okay, you guys, 3, 2, 1, here we come. It's 10 o'clock. We're ready to rock, Anthony. A big week in the Bitcoin mining space, you guys. We've got slides prepared for all of the big 15 publicly traded miners. We're going to be doing an AMA style today. So we've got our initial 5 or 6 slides that we typically go through talking about the macro updates and news. But post that, we're going to be taking questions from the audience here. First come, first serve. If you guys want to get your questions in, feel free to throw them in now. Anthony, and you're going to be on the spot for about an hour and a half of pure questions this morning. How are you feeling about that?
Yeah, feeling good. Yeah,
Camera's cutting in and out on us here.
Market's not great, but I'm feeling okay.
There you go. The camera's cutting out in and out a bit too, Anthony. So maybe just check your wire there before we jump into the presentation.
Sorry. Yeah.
No worries. We just got a new Mac upgrade for Anthony this week, you guys. He's living in the 21st century now, and there's been a couple growing pains this week, Anthony, about those hot corners.
Yeah, I'm not a fan of the Mac at the moment. I mean, might probably grow on me. I mean, people say you've got to use it for a month before you start making your mind up. There are some good points, but I think when you've used Microsoft for 20 years and then move across to Mac Air, that's where the challenge starts. So it's just a case of like just learning something new, learning all the shortcuts. But yeah, I had to do it because my previous laptop, after 9 months only, just died last week. So Bryce told me to go out and get an Air Max, so I did.
There you go. What a tragedy. Well, good thing for you, Gen Zs, Anthony. You guys are pretty quick at learning technology, so that's moving in your favor. Hey,
we
Bitcoin
created the internet in the UK, mate. We created the internet.
So. There you go. And the Titanic in Southampton, where
and
you're
actually, yeah, you mentioned the so I'm actually based in Southampton, UK, and Southampton is famous for the Titanic, but also the guy who invented the internet, Sir Tim Berners-Lee, he actually teaches at the university in Southampton. So yeah, two good points. And they got a Premier League football team. The ground's literally 5-minute walk from where I am now. Yeah.
Jeez. Well, if it wasn't for the 80% tax rate there, I would come move there with you, buddy. I'm glad the internet worked out a little bit better than the Titanic. You've got one good, one not so good. And speaking of not so good, Anthony, the Bitcoin price was looking pretty strong over the weekend. I have a local high there pulled up of 64,800. I think it did cross 65, I think you said momentarily there, but since then, pretty significant fall off. I've seen a lot of the ex-influencers, A-Trades, Bitcoin Bella specifically talking about this Bart Simpson pattern setup. Basically, I guess kind of towards the bottom right of that chart. And you can see just falling off a cliff here, down sub 59,000. I think we were even in the 57s at one point today, Anthony. So again, no control over the price of Bitcoin. What do you make of this? Who's selling, and where is this selling pressure coming from?
I don't know. Maybe it's markets. I don't know. It's I tend to take a step back with the Bitcoin price and the miner prices. I've been through 2 cycles now, so you know you have these volatile days. And actually, A-Trade called it at the weekend when we were at sort of 65,000. He actually said that he expected a pullback this week, and it's happened. So you know, hats off to him, because you know, we have to rely on these technical people to give us that insight. We just look at the fundamentals effectively. Yeah, I mean, it does what it does. We've seen this sort of like over the last 3 months. It's been in this sort of window now, so it seems to be holding firm. I mean, you know, it's down from 64,000, so 5,000, probably about 8 to 9%. But the impact on the miners is greater. We talked about volatility, Bitcoin volatility miners, and so people will be, you know, concerned today about, you know, the miners are down. I've seen one question there about, you know, why is Bitfarms down? It's all the miners are down today, so I won't put anything on the fact that, you know, Riot are selling their shares in Bitfarms. Hardly. They've just gone out and bought 19.9% of the company. They're not going to start selling it before they've even had chance to have the special meeting to determine if they can get a vote through to change the directors of the company. So that's still happening in a month or so's time. So yeah. No, it's not Riot. It's just the market today, and all miners are down. So even some of the good what we class as like the companies that have brought out some good news lately, they're all in the red. So no green miners today.
No, we'll come on to that in a second. We got a question from HPHM saying, why is everything so down today? We'll get into that. I read an interesting quote back early in my investment days, Anthony. It said you wouldn't get mad if you filled up your car with a tank of gas yesterday and the price went down on gas today. And a lot of times in these down red days, you got to think like that, you guys. This is a long-term game. We're thinking long-term generational wealth opportunities here. You can't get bogged down in the daily, the hourly, the weekly charts. That being said, though, Anthony, on the technical analysis side, I know we have Freedom on the channel quite often. There is a lot of opportunity in the swing trades here, and that's something you and I don't really take advantage of. Traditionally, Anthony and I are long, buy and hold, sometimes buying call options, but not a lot of trading from there. I know, Anthony, you did manage to capture some profits a little bit earlier in the year here, but does the swing trade appeal to you given this volatility that we're seeing recently?
I mean, some of the stocks now look, more attractive. And interestingly, I saw an update from DR Lewis, who's been on the channel a couple of times, and today, and he was buying some miners in the last day or two. So he's bought some IREN, he's bought some Wulf. I think it was CleanSpark as well was his third. He bought 3 miners. So again, making use of these pullbacks to dollar cost average down maybe some of his stocks and grow his size of his portfolio. So they always say, like, when people are feared, that's the best time to look in and buy. So if you think about where some of these 2024 highs are for some of these stocks, some of them are probably 50% of where they were at their highest. Certainly, like, so look at where IREN were over $15.50 a couple of months ago. In fact, when we were in Dallas, just after we were in Dallas, it reached $15. And I actually took some profits. IREN got to a stage where, because I've been buying the stock when it was like just over $1 from 2023 and really building up the portfolio, but because the price had increased, it was starting to become ridiculously high percentage of the portfolio. So I actually started taking profits, literally as it jumped up every $1 or $2. And in hindsight, it was a good decision to do. But I've still got quite a bit of IREN in my portfolio. It's still one of my top 4 holdings, and the top 4 holdings are sort of like equal weightings at the moment. So well, that's certainly where the last time I looked, and with the miners where they've been this week, I expect the 4 companies to be sort of like still a top 4.
No, it's a good point, Anthony. The averaging in, people talk about dollar cost averaging on the way into stocks. You effectively did that on the way out as well. That is my strategy going into this bull cycle as well. And as we've all learned, it's fairly impossible to time the bottom or top of these cycles. So I think that's a safe way to go. Now, Anthony, looking at the screen shown here, I took a screenshot about 10 minutes prior to this one. Soluna was still in the green. I had it ranked by actually worst to best. So I wanted to flip that around. By the time I took the new screenshot, every single miner on my list was in the red today. Really no surprise, I guess. Bitcoin pulling back. Obviously, miners act as a proxy or leverage play on Bitcoin. Did you expect anything other than red today?
Well, as soon as we saw the, again, it's this US Open, doesn't like Bitcoin, started to drop from the open in the US, more considerable than it done as it went through the Asian and the European markets. But interestingly, on there now, you can now see, obviously, Marathon still got its 5 billion market capitalization. But when you look at, second, third, and fourth, you've got CleanSpark at 2.7 billion. Then you've got Core Scientific at just under 2.6 billion. So there's now, just over 100 million between those two. And then in fourth place, you've got Riot Platforms at 2.3 billion. So Core Scientific are sort of like starting to move. And bear in mind, they've got a significant amount of warrants that need to be exercised. And when those warrants are exercised, that means there'll be effectively more shares out there. So the actual market capitalization will increase quarter by quarter now as they start to highlight how many warrants are exercised. They have got just over 2 years to do that. So it depends when shareholders want to exercise those warrants. They're not obliged to do it now. They have got a period to do it. Obviously, from a company perspective, they want to sort of see that funding, the exercise happen and the funding come into the company so that they can utilize that $6.81 per warrant to use it for, investment opportunities, capital to grow the HPC centers that they're going to be building on behalf of CoreWeave. And should they bring another client to the market, it gives them some more cash runway. They have got a considerable amount of cash runway now, but it's looking ominous that Core Scientific are going to carry on this climb in terms of market cap. The markets at the moment haven't really, I wouldn't say they've significantly affected Core Scientific like they've affected others. So if you look at CleanSpark share price there of $11, that was $24 in March. We've already talked about IREN. IREN was $15.50 at its highest this year. Marathon was $27 not that many more weeks ago, actually, and so that's down at 17 at the moment. Riot was certainly 2 to 3 times higher than that price this year. So Core Scientific at its highest was just over $11. So it's at the moment it's around about $10. So it's not really had the same impact. And the reason it's not the same impact on Core Scientific is the market is still taking in that deal that they have with CoreWeave, and sort of like,
it's almost just insulated the company. Hey, Anthony, it's given
Sorry?
it some it's insulated the company from the volatility of Bitcoin.
Yeah, because it's got predicted. Well, it will have. It hasn't at the moment. It actually, believe it or not, has got a contract with CoreWeave at the moment where it is delivering HPC. I think on about 16 megabytes. So that deal started delivering revenues, I think, in March this year. But the big contract, the big 200, the 70 additional, and then the 112 additional, those revenues start coming in from the beginning of 2025. So when they start coming in, fully expect that share price to be reflective of the future predictable revenues that the HPC contract has.
Yeah, great. And just a reminder, 2, I guess, predictions you've made this year, Anthony. Number 1, Core Scientific to become the biggest market cap player in this space. And secondly, Bit Digital to be really the surprise of the year. I guess the third one, Riot, is a make or break year prediction for Riot. But I just wanted to call those out as we're nearing in on the 8th, 9th month of the year here, starting to come into the finish line. Now, we do have that table, Anthony, with all the market cap rankings. So I want to get your take on that because you're right. Core Scientific is working its way up. We've had some big changes in the billion plus club. But before we do, we skipped over 2 quick slides here, and I just wanted to touch on difficulty and hash price. So we did see that nice spike on hash price earlier in the week. I guess last week we talked about that in one of our episodes, Anthony. As you said in that episode, that one ended about as quick as it started, unfortunately for the miners. But there were a few miners with a few blocks. Mara got a few, Antpool got a few that had significant Bitcoin transaction fee rewards. So maybe we can just talk to that point a few minutes here.
Yeah, I mean, the hash price, it did get down to low, about 34, maybe just under $34 per petahash per day. But it's currently, about 30% higher than that now, in the sort of like low to mid 40s. So around that $42, $43 a day. This is causing probably pain for some of the miners, even the public miners now. So, I mean, there's an expectation that the Bitcoin price, people have talked about the price going up, getting to sort of, 100,000 by the end of the year, but we just need that catalyst now to start that movement. Because this will be a challenge. If we've seen the Q2 numbers come out. I think IREN are going to release their numbers today, but I think after IREN, I think all the numbers are effectively in. Then we've had SATO Technologies today. DMG came out a few days ago. So all the numbers are in, and if we look at the real position taken into account, the valuation of Bitcoin, all the miners physically had a loss in Q2. However, if you look at the 6-month position, so take into account January to June, so you have like the pre-halving, post-halving scenario from their accounts. A lot of them are actually quite good, and it showed that, I think, in the Q2, even though there was losses across the board, and only one miner actually had a net income, which was Hive, but Hive don't use the FASB rules, so they in their accounts above the line, they don't actually put in the devaluation of Bitcoin, but below the line they do absolutely highlight it, because it did have a $20 million impact on their account. So where they had a 3 million income, the actual the net effect of their valuation of Bitcoin, the true valuation as at the end of June, would have had effectively a $20 million charge. So they had a position of about 17 million loss if you do a sort of a comparison with the other miners. So effectively these unrealized losses and gains are going to appear in every quarter now, because of the ruling changes for a lot of these mining companies, and we'll see that. And so basically you've got to start stripping out maybe some of these non-cash costs. Now, if we just look at cash costs, the majority of the miners at the moment are still able to, and this is based up to the end of Q2, so up to the end of June the 30th this year, we're still able to pay their bills with the revenues they were receiving in from the mining of Bitcoin. So physically pay the cash bills, pay their interest, pay their staff, pay their energy costs, all those cash costs. But once you start adding depreciation and stock compensation and unrealized gains and losses, that really does sort of like skew the performance for all these miners, and they are true costs. I don't want to sort of like say depreciation is not a true cost. I mean, end of the day, these mining companies are spending tens, some of them are spending hundreds of millions of dollars on mining machines, and therefore, it comes at a cost. Now, they're doing that by raising money through diluting the shares, but there is a cost of doing that. So,
Yeah, Anthony, just to interrupt for a second, we got a very timely question on the screen as you're talking about costs. CleanSpark, additional cost highlighted in their earnings review here. What's your make on that one?
What, on the purchase of a jet?
Yeah, where would that one show up in the accounting lines you're talking about there?
Well, I mean, for one thing, it's an asset on the balance sheet. I mean, I think what they've done is they put down a deposit for a jet, so it's not in the accounts at the moment, but it's certainly in the notes of the accounts. So the jet price was a little under $11 million in terms of capital cost. I think they've put a $500,000 deposit on the jet, and then you're going to have running costs, which will start from when the jet arrives. So, typically, if you're utilizing an asset like that, or if you've got a yacht or something like that, it's not just the cost of buying the asset, it's the cost of operating the asset. And it wouldn't surprise me if the cost of operating that jet for a year would be in the region of, say, 20 to 30% of the actual purchase price. So, $2 to $3 million in terms of, when you think about pilots, maintenance, staff, where you're going to, where's it going to be stored? So all those costs associated with flying, yes, it's going to get them to locations maybe a little bit quicker, but at the end of the day, they're not the only Bitcoin miners. 30 other public companies out there. I don't see anybody else rushing out to buy a jet. Some people will argue, well, they've got all their sites in a couple of the states now, so it means they can get to and fro. But they've managed to do it up to now with the use of public transport. And I don't care if most of these execs will be flying business class at least, or I think we say business class in the UK, you guys say first class in America, whatever. But they'll be flying a higher premium seat than the normal person out there who flies in economy. And I just think it's a sort of an extravagance when there's probably better things you could have invested that 11, 12 million, and the fact you're going to have to spend a sum each year. So that's my view. I mean, at the end of the day, I'm an accountant, so I'm always looking at cost, how to reduce cost, and I think that was just, for me, the timing of it the timing of it this year, they've made a few faux pas this year. I mean, they give themselves a massive amount of, or allowed themselves to, to sell a lot of stock before they issued an ATM back in March, which didn't go down well, not just with the retail investors, but with institutional investors. I mean, Zach got ripped to pieces in London on the stage by, an institutional investor on the grounds of what they, he done a presentation on shareholder wealth for 30 minutes, and this institutional investor just ripped into them, on the grounds that they'd sold shares literally the day before an ATM, which isn't a good sign. And yes, I don't have a problem with any company director selling shares. You earn the shares, you have a right to sell the shares. The timing of selling the shares and then saying the next day we're going to have an 800 million ATM isn't a good sign, because the share price was at $24. It dropped down to 17 as soon as that announcement happened. The announcement happened when the market closed. It was just before Easter. So it was 3 or 4 days where you couldn't even go into the market. And then when people tried to look at selling some of their shares, the price had dropped like, 30, 40%. So
Yeah,
not a great sign. So this is another news story that they don't need this news story linked so close to the previous news story. I think they just quietly should have gone on, done their due diligence, got their sites, got their hash rate to 32, and everyone would be pleased that they've achieved their hash rate. Woe betide they don't achieve these targets now, having bought that jet. Because that's the priority for shareholders. They want to see, that their money's used well to grow the company.
Yeah, most definitely. Now, Powell's question, Anthony, talks about that dilution that you just mentioned, selling the company or selling the shares. Obviously, a portion of that may or may not go towards this jet purchase, but a big portion of that has gone towards achieving these aggressive exahash growth targets. So not only through organic growth, you've talked about miner swaps and replacing older fleet with newer generation, but CleanSpark's also done a series of acquisitions and those numerous sites you referred to. How are you feeling? This slide's been shown on Twitter quite a bit recently. It's from their investor presentation talking about the roadmap, clear path to success towards that 55 plus exahash target next year. Now, we've started to see some of the mid-tier miners or smaller miners actually wavering on these commitments, starting to diversify, look at HPC. CleanSpark, among some of the other miners, which we'll come on to, has said, no way, we're pure play miner. We're going for broke here, 50 exahash, biggest, best miner out there. Two-parter, Anthony. Do you think they'll get there? And do you think this is the right strategy?
I think they'll get there this year. I think they've made some aggressive purchases this year, including Grid, and they've got some additional sites. But their focus should be on getting that 32 by the end of the year. And 32 is energized hash rate. It's not 32. We've got them in a garage somewhere and we'll plug them in January. It needs to be energized by the end of the year to get that target. 50 next year. Again, if they use the same strategies they've done this year and they've highlighted sites, and bear in mind they've said they've had upwards of 20, 30 different options on the table that they've gone through to look at, so there's things that, they are being proactive that way. So I'm a shareholder in CleanSpark, so I want them to achieve 100 exahash next year if they can do that. But I think 50 exahash next year, it'll still be a challenging target. 32 is a challenging target, but the recent activity suggests that they're going to get there. And actually, what they've done, which is a good way that other miners should be looking at doing as well, is they're actually going to actually change literally their whole fleet for the most advanced miners out there. And what that means is they can have actually physically less machines delivering more hash rate. And that's how they can grow their hash rate without having to grow facilities. So you can take out some S19s, put some S21 Pros in. The S19s could be around 100 terahash per machine, but the latest machines are the S21s, like 234 terahash per machine, so more than twice the operational capacity for the same size machine. And actually, in terms of efficiency, these new S21 Pro are more than 50% more efficient than the S19. So you could have two S21s delivering, that's in terms of like double the actual hash rate. So
Gotcha.
they have highlighted they're going to do a lot of change this year. Even miners that you would not normally expect a company to start changing now, they've gone full in on machine efficiency. So that the current efficiency is about 22.84 joules a terahash. That's going to go down, to 15, 16 joules, which would be, at the moment, that'll be the most efficient fleet in the market. They've got the most efficient fleet now, but it'll even be more efficient when you think about all these other big miners bringing on their new machines this year.
Yeah, great. Now, in terms of pricing, Anthony, a follow-up from Powell. How many miners? I know we've talked about building out in terms of 1 exahash would cost X amount for facility, X amount for machines. I remember about 3 months ago, we were hearing in the neighborhood of $16, $18 per terahash. Where are we seeing pricing now, and roughly $10-11 million? How much could that get you? Sorry to put you on the spot,
no,
but
it's going to probably get you a little bit less than 3,000 machines of the latest S21 machines. So based on about a $16 a terahash, which is what IREN, CleanSpark have been paying for their latest machines, $14 to $16. I think it's about $16 now, and that's with discounts. So actually, the price, if like the likes of me and you went to the market, that price might be $21, $22 a terahash to us. But these companies, they've got discounts or credits they can apply to the price, and they get it a little bit cheaper. But that would give you 3,000, just under 3,000 machines, and that's going to give you about a significant amount of hash rate to start utilizing. I mean these companies are spending hundreds of millions, so it's I haven't got I need to sit down and just do the quick maths, but yeah, 3,000 machines. 234 terahash per machine, and then divide that by 1,000, you get it into petahash. So,
gotcha.
But yeah, a significant amount. I think approximately, I'm going to say now, approximately 0.7 of an exahash for $11 million. That's what I'll put it on the table now. About 0.7.
Well, you guys can fact check. We'll come back to that one, Anthony, towards the end of the video if you want.
And if you think about it, Bryce, like $14, $14 million gets you 1 exahash. $14 to $16 million gets you 1 exahash. So what's $11 million going to get you? The latest machines, it's going to be about 0.7. So I think I'm fairly close with that.
Well, I think you are too, buddy. That's why you're the resident analyst on the channel. We're up to 66 concurrent viewers. You guys hit the like button for us. It really helps get this out to new viewers. We haven't done traditional podcasts in about 2 weeks on the channel. We've been doing a lot of earning interviews. We're seeing a lot of questions about Wulf, Anthony. So I'm going to come on to Wulf next. But before we do, I just wanted to hit on 2 slides that we missed at the start there. So number one, the macro update in terms of news. We had Dennis Porter on the channel yesterday. This is a picture of him with presidential candidate RFK Jr. Interestingly enough, Anthony, when we were in Dallas touring the facilities for Denton and Corsicana, we went on the JFK assassination tour. So we learned all about this family's history, their influence in the political realm, how integrated with the Democratic Party this family was. Now to have RFK come out and put his support behind Trump, both of which these candidates were in Nashville speaking at the Bitcoin conference. We got to see both of them live. Obviously very pro-Bitcoin coming together. That's increasing the odds of a pro-Bitcoin election outcome. A lot kind of mixing here in front of our eyes, Anthony. Now, you and I obviously are not American, Canadian, and a Brit, so we don't have any invested interest in terms of voting, but this will impact the price of Bitcoin and the policy moving forward as Dennis and his team at Satoshi Action Fund work on and talked about in yesterday's podcast. So what are your thoughts there?
Yeah, no, it was a good. I enjoyed the podcast with Dennis yesterday. We got the opportunity to both be at that presentation that RFK gave in Nashville, and actually it was a very passionate speech. He's at the end of his speech, he actually highlighted the fact that he converted 85% of his wealth into Bitcoin, which means, effectively he's all in. I mean, I wouldn't know. I wouldn't know. I wouldn't put 85% of my wealth into Bitcoin. I'm a bit more managed that way. But he's certainly orange pilled, and he understood Bitcoin as well. He talked like he had a really good knowledge of itself. So hats off to somebody who's not in his early years, but he understood what he was talking about, and that was really. And if you compare that to, say, the Trump speech, where Trump also was passionate about Bitcoin, you could see that he didn't have a full understanding, because he was intermingling crypto and Bitcoin in the same sentence, and they're not the same. But fair play to RFK. He's done his homework, and he was prepared, and he gave a really good speech. And the fact that he's now supporting Trump, that means you've got a real stance there in support of Bitcoin. Should they be successful in the elections? But what it also does is it makes the other side also think, do we need to start upping our game and in support of Bitcoin as well? So it makes, and I think that's where some of the mining companies are hopeful that by getting some of these politicians involved, it creates more movement across the board, because it's not just Republicans who are buying crypto. There's 40, I think Dennis said yesterday, 52 million Americans have got some sort of either Bitcoin or crypto ownership. And that's a significant amount. I mean, that's getting close to the population of sort of France or something like that. So that's a significant amount.
Anthony.
Well, it's more than
Canada.
Canada. It's probably about 10 million or 12 million more than there is in Canada. You might have a big country, but population-wise, you're about just above half of the UK, and we can fit the UK into Canada about 40 times. So
there you go. A lot of space. Me and Mark can go on our off-road trucks and kayaks. We don't see anyone for miles here, Anthony. Now, you talk about this thesis of, okay, regardless of which side of the aisle is talking about Bitcoin, it's beneficial to Bitcoin. I would generally agree with that. I think the more people talking about anything, the more adoption and information education goes around. That was what Dennis talked about as well, is the Democrats have actually spent a lot of time and energy researching, starting to understand crypto and Bitcoin as well. Now, Crypto Rover, I love the tweets from this guy as well. He's put out something not only talking about Bitcoin cycles, but election cycle timing as well, indicating in the last two Bitcoin cycles heading into election, we saw a very strong Bitcoin trading action or price strength afterwards. That seems to line up kind of with your underlying thesis here, Anthony, of this becoming a platform topic. Do you think history will repeat, or as I've seen many times this week, rhyme in this case? Are you feeling like Bitcoin is ready to break out here?
I think we're hopeful. We've been saying for a while now, post the halving, 3, 4, 5 months, it starts to move, and we're in that sort of space now. So, and I was on a Spaces meeting at the weekend on Sunday, and there was a lot of good speakers on that channel. We had quite a few of the technical guys, so A-Trade and Freedom by 40 and a number of others, all sort of like gave their view on the Bitcoin price, and they all said by the end of the year it's certainly heading up to that 100,000 mark. So the timing of everything fits at the moment. The fact that we've had ETFs this year, unlike any other year, would have suggested that it may have happened earlier than that. So we need to get it back above the all-time high, which occurred in March. So we're now in sort of like edging towards September. Halving happened in April, so we're already 4 months past the halving. So we're right in the middle of that space where it's in previous cycles it started to go. So, let's see what happens in the next few weeks to see if it starts getting that momentum. But
what's exciting though for me, Anthony, is we're starting to see the fundamental and the technical analysts kind of teaming up and agreeing here, saying that we're all building towards something. And another really great point by Jane here, I wanted to get your take on, Anthony. Trump is obviously huge on energy independence for the United States. Whether that's coming from renewable or not is another question. But the interdependence of electricity, grid stability, and Bitcoin mining, I think he's really made that connection along with RFK and some of these other political leaders. Michael Saylor gave a really interesting speech talking about Bitcoin adoption. There was also some people talking about how Bitcoin mining in Africa has enabled them to build out electricity grids, giving electricity to local communities. It's really a complementary service. And I think countries who want that energy independence, they want that high energy per capita requirement, realize they need what's known as an energy sink or an energy dump like Bitcoin available.
Yeah, no, absolutely. I mean, we know that the Bitcoin miners, do help to balance the grid. So that when you're in Texas, you have to have access to a significant amount of energy to cover the times when it's really utilized, the high demand levels. But a lot of the time, it never reaches that level there. So the great thing about Bitcoin miners is when it's, if you've got the energy available there, they can go and utilize that energy. And then when the demand is required, they can switch off. I mean, what other industry can you turn off machines and power down in less than a minute? I mean, we're talking sites, not talking like 10 machines. We're talking 100,000 machines. It would take less than a minute to power down the whole lot. And it takes about the same length of time to power them all up as well. So this is great. You can't do this with like aluminium factories or battery factories or car plants. They
Steel
can't.
mills,
You
coal
go
mills,
to Elon Musk and say, shut down in a minute. He'd just laugh at you. They can't do it, but the miners can, and this is what's great. So this is what we call, when you hear the term balancing the load, they're effectively balancing the load on the grid, so it keeps the power maintained at a level. And actually, it's good to utilize the power. It's not great if you've got like 10 gigawatts of power for the state, and you're only using say 5 gigawatts of power, but you're creating 10. It's not great to have to create that much if you're not utilizing it. And if you're creating it because during certain months of the year or certain periods of the day that you do need to use 10, then it's the miners are there to say, look, we can help you utilize that power, and we'll pay for it, and that money goes back into the state, and the state can utilize that money as a revenue stream. When all these budgets are trying to be put together, it's challenging time year on year with inflation, all that, how they're going to pay for services. Well, the Bitcoin miners are great because they'll go in there, they'll utilize that power, they'll pay for it, and it's a win-win across the board. So I just think the messaging that's come out over the last 3 years hasn't been great from certain areas. And you've got the likes of Dennis, who's going around there educating people. And Dennis is one group of people, but there are many groups in the space that are doing that. To a certain extent, we're doing it through our platform as well. We're highlighting it. I wrote articles on power for Compass Mining, which you can go in and have a look on the Compass Mining website under content and look at articles there. I've written over 85 articles for Compass Mining, and quite a few of them have been educational ones, because end of the day, we've got a duty to let people know about mining companies, and it's not all the bad news all the time. A lot of it's good news, and we'll come on to some more of that good news when we mention some of the mergers. That'll be interesting.
Yeah, I want to get into the M&A topic here today because we're starting to see that pick up. And honestly, Anthony, of all of the learning I'm doing in the Bitcoin space, the energy infrastructure, energy utility grid, that's been the most interesting to me so far. So I'm glad we get to learn about that. Another thing I'm glad we get to do is going to Amsterdam. So I've never been there, Anthony. You and I have met up a few times already this year, always in North America. So now I have the turn to be jet lagged over there. We also got invited to speak, both of us. Not sure in what capacity, if it'll be moderating or actually speaking, but we're looking forward to that, and a discount code for anyone going. So I know we've got a fairly strong viewer base in that area of the world. Germany specifically is a top country that watches the podcast. So if you guys are in the neighborhood, you want to pop into Amsterdam, we're going to be there all week. We're going to be doing meetups. We'd love to see you guys. And use the Power Mining code if you are going to buy tickets. And speaking of that, Anthony, events, we've had a number of kind of key events on the channel this week as well. So Ross O came on, talked about immersion in depth some of the benefits. First time we actually saw data points in relation to immersion and some of the successes there. We just talked about Satoshi Action Fund. Dennis Porter came on yesterday, gave us a great update on the political policy side. You and I were up to our old tricks with the traditional podcast. And then tomorrow, a first of its kind in the space. So SATO Technologies actually using the podcast platform in a live function. So tomorrow morning, 8 a.m. Mountain Time, 10 a.m. Eastern, we're going to be hosting the Q2 earnings presentation call for SATO Technologies, followed immediately by a Q&A. So same exact fashion as today, you guys. The meeting invite or video link is already live if you want to go in and click waiting or scheduled for that. Should be really fun. Anthony, what's your take on this interactive kind of live Q&A, AMA type presentation?
Yeah, it's just a development that's occurred. I mean, this will be our second live one with SATO. We had them live last time, and it's just, they want to use the platform to release their earnings, and in the way we're talking now to lots of followers, the same will occur tomorrow for them, and it gives people a chance. If you've got any questions for Romain and the team at SATO, put them in the comments here, or drop us a DM or something like that, and we can make sure that those questions get asked. But it's great to be part of this. I mean, this doesn't happen everywhere else. I mean, you've got spaces meetings and things like that, but this is sort of like another level, really, in terms of when you get not just interviewing miners, but actually letting them present their live earnings update on the channel. I think that's quite kudos to Power Mining Analysis. So looking forward to it. Always great to see Romain. Romain was actually the first person I physically met in the space. Nearly 3 years ago in London, I went to a conference, and he'd actually got me a ticket for the conference, and I met him. I met Fanny, who was his chief operating officer. Fanny's now Philippi's now she's the director of TeraWulf. But I met them both in London, had a great time with them. It was a great conference. I got to meet so many other miners there, but actually Romain was the first one I met at the conference. So it was really good to catch up. And in person, I've met him probably half a dozen times since then at various places. We met in Dubai, we met in Nashville, we met in London again. So constantly I bump into Romain quite a lot, and he's always great to have a catch up with. And this is good. This is to do their earnings on our platform. That's great. That's kudos to the channel.
It sure is. Romain was actually the first guy I ran into in Nashville outside the convention center too, funny enough. Now, we've gotten a lot of questions about Bitfarms, so I wanted to jump into them first and foremost here, Anthony. TeraWulf's also a common one we're getting questions. Bitdeer. We've got a lot going on in the space here. So Bitfarms is first and foremost. Now, we have a separate slide at the end, Anthony, talking about the Stronghold acquisition. So we're going to do a little feature here, you guys, on M&A in the space specifically. But aside from the Stronghold story, there's a number of key developments at Bitfarms as well. So I'll increase the size here, Anthony, so everyone can read. We've had a few key site development updates. We also got some good pictures on the right-hand side out of Paraguay here. We commented about the color of the dirt last time, but another update on the left that just came out yesterday, talking about the Sharon, Pennsylvania site. So I'll let you talk through both of these. We'll leave the Stronghold portion till the end here.
Yeah, I mean, it's good to get these updates. I mean, they obviously announced it, a month or so ago about this purchase of the Sharon facility in Pennsylvania, and we want to see these updates in Paraguay because they've got an aggressive target to reach by the end of the year. It's 21 exahash, and this doesn't include the Sharon or the Stronghold. So effectively, they got to, I think, achieve something like 8 exahash in Paraguay. So it's all guns blazing to get that site ready for energization before the end of the year. And Ben's been on the channel many times and has basically, said it's going to be energized by the end of the year. This is not about just getting miners installed. They'll be switched on by the end of the year. So time will tell. But it's good to see updates like this. Obviously, the side news is obviously the Riot are looking to acquire Bitfarms. But Bitfarms, interestingly enough, they've just been getting on with their business. They've actually done a few things that Riot were critical of. They've actually removed or two of the directors that were being criticised by Riot are actually now off the board. The chairman and one of the other directors, the two co-founders, effectively, they're no longer on the board, so they've been replaced with independent directors. Fanny Phillip being one of them, and they announced a new chairman very recently. So that side has been ticked. So they have got now and Ben Gagnon is also a director on the board, but they've got 4 independent directors. So now they've effectively got I would say classed as like an independent board, because most companies have the CEO on the board of directors. So it's not unusual for that there. And then the second thing is they've started to grow their size by this purchase in Pennsylvania, Sharon facility there, and they're going to look like they're going to get 30 megawatts online by the end of the year, and that's going to be quite a nice addition. If they've got mining machines going in there, that'll give them an extra couple of exahash going into that facility there. They've purchased Stronghold Mining, but that deal will take a bit longer to finalize. I think they've said like early next year. So they can't include the 4 exahash in their numbers because it won't be finalized this side of 2024 apparently. So but maybe it gets them closer to their target next year, which is 35. So they're just going about their business there, and letting the sort of like the stuff in the background with Riot just carry on, and that will, as I said many times, that will go down to the shareholders at the end of the day what they want going forward, because there's no significant shareholders in Bitfarms itself. There's no internal shareholders. I think the directors, if you added them all together, it's 2 to 3% of the company. So the biggest shareholder in Bitfarms at the moment is Riot with 19.9%, and then it's down to retail investors. So the retail investors and institutional investors. Retail and institutional investors will have will basically decide on what happens to the future. So it's not down to me, not down to you, Bryce, not down to Ben Gagnon, not down to Jason Les. It's down to the shareholders. So I think that's where we sort of like leave that particular story, because people think that I've got one way of I'm biased towards Riot, and I'm not biased towards Riot. I've got as many Bitfarm shares in my portfolio as I've got Riot shares, so I want them both to do exceptionally well. I really hope Riot get their Corsicana site up and running. I want Bitfarms to deliver what we've got on the screen here. These 2 great facilities, get them up and running, get the hash rate end of the year, and get the share price moving in the right direction, because Bitfarms does appear to be priced lower than its peers. And the market's priced them at that level there now. Is it fair? Is it a case of will there be an expectation like we saw IREN start to sort of like move when they announced the 30 exahash? It went all the way up to $15. It's pulled back now. We've seen Bitfarms also rally, but nothing like this. Some of the other shares that have rallied there. So it is sort of still in the doldrums a bit. I think its market cap, if you compare it to Wulf, compare it to IREN, those 3 companies haven't got any debt. CIFR, another one you can compare it to, sort of like Bitfarms has got the highest hash rate of all those 3 or 4, and yet the market capitalization is the lowest of all those 4. So I do scratch my head sometimes as to why it's so low. Operationally, no one can compete with Bitfarms. Only Hive Digital can compete with Bitfarms in terms of month on month. Every month, the last 3 to 4 years, those 2 miners have been head and shoulders above everybody else. The rest of them are catching up this year. There's a lot of closeness this year, but it's still those 2 are effectively finished first and second in 2024. They've done it for the last 3 years. I don't expect that to change this year, especially when you think about what both companies are doing in terms of growth, in terms of replacing miners. So I expect them to operationally, remain where they are. But the share price is down to the market, and at the moment the market's not fully focused on Bitfarms. If they make some sort of announcement to turn around and say some of this megawatts here in Sharon or megawatts that they've acquired through the Stronghold deal is going to get utilized for HPC, and they bring in an announcement with a client, then that's going to obviously, affect the share price. But I think I did a table recently. I think it was only last week. And if you look at the last 3 months, Bitfarms share price is actually up 80% in the last 3 months, whereas CleanSpark, Marathon, Riot are all negative for the last 3 months. But Bitfarms, even though it hasn't announced, more so probably because of the Riot interest, its share price has increased. And this was last week, so we've seen a bit of pullback in all the miners. But last week, the share price was about 80% up based on the last 3 months.
Gotcha. Yeah, and it's nice to see Ben really focusing on what he can control here, Anthony. Obviously, this Riot story is making headlines. It's the hot gossip in the forums and the X community, but Ben, and more power to him, is not worried about the distractions. Like you said, it's going to come down to a vote at the end of the day, which is out of anyone's control. He's really focusing on pushing the business forward. The other thing that he said in his interview most recently with us is his first, mission or activity as CEO is to meet with every key member of management within the entire company to talk about bottlenecks, potential opportunities, synergies, which I thought was a very mature, smart way to enter the position, and a great way to get a full understanding of the business. I know from my corporate background, nobody knows the operational inefficiencies better than the people actually working and doing it in the field. So I thought that was very astute of him as well. Now, we'll talk about the Stronghold acquisition in a second, but we've got a lot of people talking about TeraWulf here, Anthony. So I wanted to bring them up next. Get your thoughts from the Wulf pack here. This is another company really known for their low-cost power. We just had the team on recently, Patrick Fleury. It was a great interview. Just pulling up the Wulf is 23. And side note on Bitfarms, guys, we actually have Ben scheduled on again mid-September. So if you do have any questions for Bitfarms, let us know. TeraWulf, we just had Patrick Fleury on. It was a real pleasure, Anthony. This is the first time I've met Patrick. Great interview, great discussion. He talked a lot about this unparalleled access to power. So we talked about the 2 facilities, Lake Mariner. That's the one that has the Hope of Port Authority interest as well. That's the 1,800 acres on Tidewater, which is obviously super critical, especially with low cost power. Then you have Nautilus, which is the nuclear facility, 2 cent kilowatt or 2 cents per kilowatt hour. And that's on a contract for 5 years. I think he said there's about 3 years left. So a lot to like about TeraWulf. In addition to that, Anthony, this is just secondhand information, completely rumors, but a lot of people are expecting TeraWulf to announce a fairly significant HPC contract or client. They've got joint interest with a hyperscaler, Amazon, obviously at one of their facilities, AWS. So a lot of speculation. What do you think about TeraWulf?
Yeah, no, I think they've everything they do at the moment is turning to gold. It's they've got these 2 sites, both of them with low energy costs there. Lake Mariner, market rates there of about 4 cents, approximately 4 cents kilowatt hour. They do benefit from curtailment there, so they do have some benefit in receiving credit. So again, it could be lower than 4 cents, but Nautilus is 2 cents a kilowatt hour, but they've only got 50 megawatts at the moment operating at Nautilus. They have an option to increase that by a further 50 megawatts. So if they can do that, that'll give them something in the region of about, potentially 6 to 7 exahash just at that one site in mining. So that's something to focus on there. But the one thing Patrick, and I agree, he's great to come on the show. He determined that they're not at the moment going to give any details about any growth in the miners next year. I think the focus for them now it was going around as a rumor at Nashville, and because of what he said on the podcast, I think there's an expectation that they will announce a HPC partner soon. Pretty much, we do need another miner to do it. We can't, it can't be the case that Core Scientific's the only mining company in the space. When we're speaking to these CEOs and the phone's going, 15 times a day with calls about HPC, we need that second contract coming through. And then what we'll see then is probably like a domino effect then, because one contract's great, but when you see another contract come through, I think it'll start opening the eyes to some of even the most stubborn miners who don't want to go into the space and realize actually there's an opportunity here, because this is we're talking about one type of business that's unpredictable in terms of Bitcoin mining. We want the price to go up, but it's not going up at the moment, and who knows when it'll go up. We think by the end of the year it's going to increase to a reasonable figure, but there's no guarantees. And then you've got the HPC contracts, which are far more predictable. So you can see why 85-90% of all the miners out there are now looking towards some of this predictability in part of their revenue streams. I haven't seen any miner yet determine that they're going to move away from Bitcoin mining and focus on HPC. So that's not happened. So all these miners that are doing it still have their Bitcoin mining business, but there is a real now push to try and get utilize some of the power that they have. And some of these companies have significant amounts of power. And we know that the HPC AI industry is seeking power all over, because they just require it to grow that industry. There's just not enough power at the moment to deliver their future requirements. And the Bitcoin miners are there as a
like
way
I say, Anthony,
helping.
there's no ex-Bitcoiners. Even the companies won't give up their grip on Bitcoin mining, eh?
But it wouldn't surprise me if we saw a smaller miner actually pivot away from Bitcoin mining and say, look, you know what, we've tried it. Now it's getting to the stage where we just can't make a meaningful profit. We're just about paying our energy bill and having to reduce our other costs, whereby it's not making it worthwhile.
Gotcha.
And therefore, actually, HPC, at the end of the day, these companies are data center managers. They manage data centers. So the fact that you've got miners in one data center or GPUs in another data center, effectively you're managing data centers. So it wouldn't totally surprise me if somebody came out and said, you know what, we've done enough of this. We're gonna pivot across to HPC, and we'll have a better deal in this period now, with guaranteed revenues. And these HPC contracts are going to be sort of like 10, 12, 15 years long. It's not like 1 or 2 years. They're all going to be long contracts. And so this is the norm. This is what we're hearing, but no one's pivoted across yet. It wouldn't surprise me if maybe 1 or 2 of the smaller miners do, because I think the gap in growing Bitcoin mining might be the challenge in going forward.
Hey, now another good question about TeraWulf. This is one you and I talked about. Steve Cohen, Anthony, we were seeing some tweets about this earlier in the week. I did a little bit of research. So Steve Cohen is the founder of Point72. This is an investment bank. He's got a net worth of $18.9 billion. I just took that live as we were talking, Anthony. So similar net worth to you and I, probably. And he picked up about 5 million shares of TeraWulf, representing a 1.3% stake in the company. So this moved the company share price obviously pretty significantly. So I just wanted to address that major institutional interest coming to the space. That's a topic that we've heard a number of times, Anthony, from HUD8, Core Scientific. A lot of the investor presentations we've went to is institutional interest is coming. It's coming fast, and they're looking at these miners as a great way to play the space overall. The other thing that I just kind of realized the other day as talking to some of these CEOs is not only does the price of Bitcoin help these companies in terms of their revenue, in terms of their HODL, their mining metrics, but the value of all of their equipment goes up as well. So as the price of Bitcoin goes up, the value of the machines, the infrastructure, the buildings, so it really does provide additional benefit outside the HPC opportunity, which is, as we say, why many of them are, I think, holding on to that focus. So, Anthony, with that being said, I wanted to jump into our market cap slide, because this is one that we traditionally look at in every presentation. You talked a little bit earlier about the weakness we've seen across the board here. So this is as of this morning. Every single miner on my list is in the red. We now have, I think, 7 companies in the $1 billion club. Notably, though, you see Core Scientific is in 3rd place. So this is a company, you guys, coming out of Chapter 11 this year. It's worked its way up this list considerably. Anthony, your prediction is CORZ by end of calendar year this year will be the biggest market cap miner on this list?
I think no, I'm not saying end of the calendar year, but I'm thinking you know, it will overtake Marathon at some point in time. It's that contract is far outweighs, and people are putting in the comments that the people who don't know the revenues, go and have a look at the Core Scientific contract. It's out there on the presentation. It's in black and white. Every number's on there. So the total revenues for that contract are 6.7 billion over the 12-year period. The total costs over that period are about 2 billion. The profit, that is the profit after everything's been paid, 4.7 billion over the 12 years. That's about an average of about 400 million a year, or $1.26 million a day. $1.26 million a day net profit. Some of these miners didn't achieve $1.26 million in the 3 months of April to June. So if the Bitcoin price gets to 150, 200,000, yeah, the conversation might change around to Bitcoin mining, but it isn't there at the moment. It's hovering around 59,000 today. So, but those numbers are out there. And, when you've got sort of 85, 90% of the miners looking at HPC and actively moving there, and we're talking about even the likes of CIFR have made another announcement yesterday, bought another site there, 300 megawatts, which they're going to utilize for HPC. We had Tyler on the podcast last week. He's already got 4 other sites totaling 1.7 gigawatts, which he feels could fit the HPC industry. You've got other miners like Bitdeer, who are looking to utilize. They've got over 2.5 gigawatts of energy in their pipeline, and that's probably at the moment one of the biggest miners with physical pipelines. Some of these have got sites and not developed yet, but actually Bitdeer is starting to develop all its sites, so it's got a real significant amount of power. And therefore, they're looking at all the options on the table. They're looking at what the returns could be. And some of these companies don't just do Bitcoin mining anyway. I mean, Bitdeer, their self-mining is about 40% of the company, and that's going to drop because they've got they're going to start making machines this year. So when they start making machines and delivering machines, maybe to the market, certainly for themselves to start with, it's going to be it's going to be a game changer for them. They don't have all the sort of like the costs of buying from Bitmain. They'll be able to implement their own machines far cheaper than going out and buying on the market. And these machines, from what led to believe, and we've seen the data, are quite efficient. I mean, their first generation machine that came out, the SealMiner 1, is about as efficient as the highest efficient Canaan miner. So 18 joules a terahash. It's going down to 14 in the next quarter with the next second generation that's being tested now. And then they're looking at a 10 joules a terahash, which will effectively could be the most efficient mining machine on the market unless Bitmain announce something. So there's going to be a little bit of rivalry here because Bitdeer were formerly part of the Bitmain group. Co-founder of Bitmain is the CEO of Bitdeer. So that's going to be an interesting dynamic.
Anthony, we talked about their power portfolio. I brought up Bitdeer just because it's
2.5 gigawatts. Yeah, it's one of the largest. Yeah, it's one of the largest of all the miners.
Another good question that came up, Anthony, in relation, I guess more sort of core scientific, but Bitdeer definitely can make a strong play in HPC AI as well, as indicated on number 3 here. Jane Smith said, hey, the hyperscalers, why would they wait for or partner with I'll find the question. Amazon, for example, why would they collaborate with a miner? Why wouldn't they just build their own data center? Are they waiting for deals that aren't going to happen in the space? Companies like TeraWulf or Bitdeer, for example. The problem is, Anthony, is this infrastructure takes 2 to 3 years to come online. So, of course, Amazon, Google, Microsoft are going to build these data centers, and they are building them currently. The problem is the demand for these large language models, the AI, the HPC computing function is here today. So the opportunity for these miners is they've got existing power, infrastructure, utilities, operational experience. They can convert to bridge that gap until really the big AI super data centers come online. So Jane, I think there is an opportunity. I don't think it's hopium. However, I don't necessarily know how long lived it will be, which is why it's so nice on the CoreWeave side to lock in a 12-year contract and really guarantee that, right?
And bear in mind, CoreWeave raised billions and billions of dollars, in funding before they announced the Core Scientific deal. In fact, they actually wanted to buy Core Scientific. They made an offer of $1 billion, which Core Scientific absolutely flatly refused, and you can understand why. I mean, the market cap today is 2.5, 2.6 billion. So not going to accept $1 billion for the company. And then literally the same day or the day after they announced the contract. So it all happened very quickly. But if you haven't watched that podcast with Adam, I'd certainly recommend looking at that podcast that we did a few weeks ago. I think it was just 2 weeks ago with Adam there. Probably one of the best podcasts we've done this year, and it really highlights that story about Core Scientific. How they've been just achieving great update after great update this year. I mean, bear in mind they were in Chapter 11. We don't want to forget that they were there for a reason, but it's about how you learn from your mistakes, and they've come out of that and they're doing it especially well this year. And they announced last week about their bond. They've issued a bond now. It's 460.
Yeah,
Convertible notes, 460 million. Yeah.
Just before we do, Anthony, I just wanted to take a second and look at Hive. This is another miner that we cover frequently on the channel, and one of the smaller miners if we look at that market cap chart, but they've got a pretty significant Bitcoin hodl. This was from their most recent earnings presentation. They actually were kind enough to use a power mining slide, which was great to see. So I wanted to get your take on Hive because size, yeah, smaller. Market cap, yeah, smaller. But in terms of utilization, production per petahash, in terms of revenue and hodl, they're looking fairly strong.
Yeah, I mean, we've talked about the operation performance of Hive, and we've talked about Bitfarms as well. If you look there, Bitfarms in sort of like third position there, and utilization probably impacted Bitfarms because they basically had quite a bit more hash rate on installed and not utilizing it. So that's why they're down at 92. But Hive generally month in month have quite a high utilization rate, always in the sort of like the mid to high 90s. Performance wise, there's only Bitfarms can compete with them. So really good operationally. The market, again, it's not giving them any benefit from that. If you look at them as a comparison to other miners, the value of their hash rate, and albeit it's 5 to 5.5 exahash, so it hasn't grown like some of the other companies have utilized their ATMs and grown quickly. So IREN and CleanSpark really use their ATMs effectively, grew their size. Hive hasn't done that. Hive has tended to go the more organic way and try to do it without raising lots of debt or increasing dilution. And it's took them obviously longer to do that. They were the first to sort of announce going into the HPC space of all the miners, and that was because of the fact they had 30, 40,000 GPUs that they were using for Ethereum mining. And when that stopped in September 2022, they had no use for them anymore. So looking at ways to utilize all those GPUs, and obviously the GPUs are required to deliver AI and HPC services as well. And so they've been focusing to try and drive that revenue. Now, at the moment, they're earning about just under $1 million a month in HPC revenue. So that's about an annualized revenue of about $10 to $12 million. Now, they want to be able to get to a position where they're earning 4 times that. They want to get to sort of like $40 to $50 million. So we'll need to keep an eye on the updates from there. But they are focused on there. They've actually got a tier 3 HPC facility in Sweden, and they're doing something different from what the likes of Core Scientific. They've really built a proper HPC facility, tier 3, which is these are not cheap to build. They're a lot more expensive than Bitcoin miners. Yes, once you've built it, the margins are really good in terms of the energy is a fraction of the price in terms of what you're getting in revenues and what Bitcoin mining is. So we know the miners at the moment, they're mining, and I think the likes of TeraWulf, it's, you know, their energy costs $36,000 per Bitcoin. Bitcoin price at say $60,000. That's more than half the price to mine a Bitcoin. When you look at HPC, I think it was IREN that said if you're getting, you know, a couple of dollars of revenue per hour, your energy costs are about 6 or 7 cents per hour. So you've got margins in the 95+%. So that's why some of these miners are going into that space. But they're doing it in a more managed way. They're not going out there rushing to get debt, to sell more shares, to try and get to, you know, to the size of these others in the speed of time. They're trying to do it in a more managed way. They're really good at keeping their costs down. If you look at the G&A costs that Hive have compared to all the other miners, compared as a percentage of revenue, so we know they're a smaller miner, so they're going to use less G&A, but look at it as a percentage of revenues, that'll give you a good indicator. One of the lowest of all the mining companies. So something that you should bear in mind when you're looking at mining stocks, but again, do your due diligence.
Yeah, most definitely. Now, good timing, Anthony. We just got a question in about Bit Digital, and you actually asked this exact same question in the interview with Sam Tabar, talking about the potential of a spin-off. Now, Sam has expressed obviously some frustration about the share price, the multiples that he's receiving on his company, despite this HPC anchor client. Now they've added this additional client with a potential revenue profile up to 700 million. The initial contract obviously isn't that big, but the opportunity to grow to that. What do you take of the question from Wu QS here about the spinoff? Do you think that makes sense?
It's possible that they will look at either moving away, maybe selling their Bitcoin mining business off and focusing on HPC. One thing about Sam is he looks at everything about the industry, or the industries that he's working with there. So Bitcoin mining and the HPC business. He's looking at, obviously, also does a staking with Ethereum. They've got over 20,000 Ethereum on their treasury, and that brings them in a nice amount of revenue each month from staking that there. So it's all about the margins for Sam, and you can see he's very passionate. He wants them to drive. They're effectively an asset-light company, so I don't think they've probably got more than 15 employees now, because they'll have brought some sales teams in to try and deliver the HPC to more customers. So maybe their numbers of staff are maybe edging towards maybe 25, but they don't physically own the sites. They don't physically own the GPUs. They do own the mining machines, but they're hosted. But they do keep things on a sort of like an asset-light basis, in the same way that Marathon used to operate all their facilities. It was always, you know, hosted. Sam's very much about the margins. He understands the margins, you know, so this is important for Sam, and I think, you know, we're trying to get him to, you know, effectively say, is he going to like basically just pivot across to HPC, because I think he's not happy that the market looks at them as a Bitcoin mining company, but they have this significant amount of revenues. And if you look at the screen there, you've got, you know, 12.5 million of revenue for HPC in the first quarter. It was 63% margins on that revenue, which is really good. So their market cap today, I think on your screen, it was about $500 million. So it's sort of been edging up. I think the share prices, if you look at the share prices last 3 months, you've got the likes of Core Scientific was up 270%, TeraWulf was up over 100%, and Bit Digital was the third mining company that had a great share price increase over the last 3 months. So you know, we just want obviously the market to recognize these a bit further. One interesting thing that came out of the podcast was their deal with their biggest client. They're now wanting to look at going for the more efficient GPUs, the new model that's come out there. So I think looks like it's going to put a delay on when those machines will actually be installed. I think it's towards the end of the year now. So that revenue, where we expected it to increase to sort of annualized $92 million, will effectively, it's 50 at the moment, but it will go to 92 probably from early in 2025, and that's because the client wants more efficient GPUs in place.
Now, Anthony, I want to come on to one of the pure play miners next, because this is a topic, a theme that a few people have asked about, not only in the comments here, but in prior videos. In this video or post with Sam Tabar on the screen, this was actually put out by Bit Digital corporate account. 32,000 people were had the impression of this video. Pure play Bitcoin mining is dead. Sam Tabar came out and said pure play mining is not a viable business strategy. There's too much risk involved. You cannot bet on the price of Bitcoin. That cannot be your only revenue stream. Now we have a comment from one of the viewers here saying, hey, you know what? Bitcoin miners have unlimited upside potential. And these HPC numbers, we haven't seen them materialize. We haven't seen the core deal come into fruition. But as you can see on the screen, Anthony, the HPC numbers are real. The margins are good. What do you make of this divergence we're seeing between the pure play Bitcoin maxis, the marathons that are buying Bitcoin, the CleanSparks that have 50 exahash plus targets, the Riot, which we're going to come on to next, and then these HPC players that are saying, hey, you guys, that's not a responsible way to run a business?
We just have to look at where Bitcoin price is at the moment. It's 59,000, so it's not 150,000. It's not 200,000. It's not us you should be listening to. It's the Wall Street guys. We had the opportunity to see these Wall Street guys in June and in July at Nashville as well, because they were there as well, and having the same conversations with these analysts. This is their day-to-day job, is to assess these companies based on future earnings. They're not interested in Bitcoin mining at the moment. It's not attractive to these analysts. That the numbers don't really stack up in terms of profits. They're not making profits effectively. We're talking about, they're able to manage from a cash flow perspective, but profitability, they're all making net losses. Every miner made a net loss in Q2, or effectively the April to June figures that came out recently. So that doesn't give that doesn't provide any sort of benefit for the Wall Street miners to pay too much attention at the moment. Now, if the price goes to 150, 200,000, then that conversation changes. But when a company like CORZ Scientific, and people say, oh, they're not got the revenues yet, the revenues will start in 2025. They are now converting their facilities that were hosting Bitcoin mining machines into HPC facilities there. So they're actually converting, I think 5 of their sites, and they've actually built, or in the process of finishing, some other sites that will host the mining machines that are coming from these facilities. So they're doing a lot of work now to get things moving, and their presentation clearly states that the contract starts in early 2025. So the revenues will start coming through. The great thing about that contract is all the capital costs to develop these sites. They're going to get $575 million from CoreWeave in advance as effectively like a loan, which gets paid back over the first 2 years. So to say people, there's no upside in it, this is where the conversation is. Listen to what we're saying. It's, this is where the Wall Street guys are. We've spent time with them. It's great actually, because some of them even watch the show. I was quite surprised. I didn't physically know those, but during that day at the CORZ Scientific Investor Day, and also in Nashville, quite a few of them were coming up to me and saying, hey, we love what you do on your podcast. It's great to see that information out there. And next minute they're saying, we work for JP Morgan or Cantor Fitzgerald or B Riley. And it was just like, oh my god, and so it kudos that that they do watch this, but it was noticeable. We had Denton one day and we had Corsicana the next day, and all these analysts had flown into Dallas, and the bus was jam-packed for the Denton day, which was the investor day. So Adam was giving his presentation on HPC, and the next day was Corsicana, and the bus was like half the numbers of analysts were there. And really, Jason already said quite clearly he's not going to go down the HPC route. All the power at Corsicana will be utilized for Bitcoin mining companies. So you can see the switch off there of yes, you're going to have those analysts that actually work with Riot would have had to have gone to that day, because that they are there. tracking Riot, so they'll have to be at that day. You know, that there's a, you know, that they do work together. You know, when Riot want to dilute shares, they'll go through these companies and use them for that process. So there is like a relationship with some of the Wall Street companies. That's how it works. But it was noticeable that there was a lot of people missing that had been there the day before. I mean, it was every seat was taken on the bus. We were all, you know, whereas the next day we were all sort of like had a spare seat to everyone, like, you know, so you can effectively say the bus was half full. But I'll be honest with you, I enjoyed both. I enjoyed both days. Got so much information, so I'm not trying to, you know, downsize what Riot are doing. It's opened my eyes up to what that site really is, and the photographs at the moment just don't do it justice. But HPC is the current conversation. That's what it is at the moment. It's all about now. In a year, 18 months time, when the Bitcoin price gets to a level there, it goes back to Bitcoin again. You know, where was the conversation in December 2022 when the Bitcoin price hit $15,500? Nobody was talking about it. All those analysts who were out there when I was doing it, I went through all that bear market, and I started in this space, you know, 4 years ago, and there was a couple of people doing it then. There's a guy called Blonity who was exceptionally good. I liked him in the space. He's probably one of the reasons why I stayed. But I carried on going all through the bear cycle, and there was only the likes of, I think, me and Sebastian who were doing regular things all through that bear cycle when nobody else was talking. You couldn't speak to a CEO for life of you because they were focusing on trying to deliver a service where the Bitcoin price was, you know, really at rock bottom, and they had debt to repay, and so you would never get any of these CEOs for interviews. We're now in a sort of like, we've been in a bull cycle for, well, the share prices and the Bitcoin price have been rallying for the last 18 months. So, you know, since that low, we've seen the Bitcoin price, you know, go up by 300%. And we've seen some of these shares in these companies go up by 500% in that period of time. Now you can't get them off social media. They're on Twitter Spaces meetings. We've done over 50 interviews this year with CEOs. You know, I hope that we'll get the same opportunity when we go through the next bear cycle to interview some of the CEOs and get their take on what's happening when things aren't going as great for them. So that's going to be the sort of the litmus test as we go forward there. But the current conversation is all about HPC, and, you know, bear that in mind. And you know, we can talk about the pure play miners, and there's 3 of them out there that are, you know, totally pure play. There's Marathon Digital, there's Riot Platforms, there's CleanSpark. Even Ben Gagnon said in the podcast, you know, they're keeping their eyes wide open to the HPC side. They're not totally, but the other 3 have said zero. And it's sort of like, it makes me wonder, because this is an opportunity. They are, you know, 3 of the biggest miners out there, 3 of the 4 highest market capitalization miners. And actually, if you think, if there's a big requirement for power and they've got sites with significant power, why wouldn't you even contemplate utilizing it for another service that, you know, can deliver great revenues and great margins?
Yeah, most definitely. I want to come on to those pure play miners in a second. And you talk about following the analysts here, Anthony. That's exactly what we did down in Denton. Core Scientific, a number of times so far this year, you've said they've really gone strength to strength. You referenced this slide earlier in our discussion as well. So this is basically some of the key milestones or accomplishments so far in 2024 for Core Scientific. Keep in mind, we're only 8 months in, and the slide is absolutely jam-packed here, Anthony. So when you say CORZ has gone strength to strength, when you say Core Scientific is going to be a real contender in terms of top market cap in the sector, what do you really mean? And which of these points, in your opinion, are the key ones to that story?
I think every point on there is just, you know, one good news story after another. If you think about the fact that people were in the HPC space. So we had the likes of Hive, we had the likes of Hut, we had the likes of Bit Digital, IREN were in the HPC space delivering some sort of HPC service. Core Scientific came in and announced a deal that sort of like was, you know, just so much bigger than everything else. I mean, that initial 200 megawatt deal, 3.5 billion of revenue over 12 years, starting at the beginning of 2025. That was the sort of like the catalyst. Even when they announced the 200 megawatts, they said that they were effectively providing 500 megawatts for clients going forward. So 200 megawatts was the first starting point. People came out of that meeting in Denton so bullish that they were expecting another update quickly, and within a few weeks it was announced was an extra 70 megawatts going to CoreWeave. So a further 1.2 billion over the 12 years. So that's taking it from 3.5 to 4.7 billion. It didn't take that many more weeks for them to turn around and provide another 112 megawatts. So all these boxes on here, on this slide here, we're talking a very short period of time. The first box there is going back to March, and we're sort of like the last box is about a month ago. So you can see now 382 megawatts of power going towards HPC. Gives them still 118 megawatts. I think there's still another week or so left on the option for CoreWeave to actually go in and increase their contract to closer to that 500. And if they don't, you probably expect Core Scientific to announce in the not too distant future other customers, because when they announced the first deal at 200 megawatts, they'd had 50 expressions of interest to go through. Now, not all those expressions were of the size that they wanted to utilize, so they basically got the 50 expressions of interest and said, right, we want all those that are over 100 megawatts, and also all those companies that were prepared to give them the capital support to deliver the infrastructure. And that narrowed the 50 down to about 10. So, CoreWeave being one of the 10, if, for instance, they don't decide to take the option up, I'm assuming there's still conversations with other potential customers to utilize the remaining elements of that power. So it's a case of watch this space. And at the same time, we're talking about a Bitcoin miner that's going to, it's agreed to procure 15 exahash of the latest mining machines from Block, which are coming out, this year and next year, and that will start. I would imagine they'll start updating their fleet. So Core Scientific got quite a lot of S19s. So the older mining machines, S19s have been around 3 to 4 years now. So, and I think about 60% of their fleet is S19s. They have got some S21s in place. They have got some XPs in place, but they've got a significant amount of S19s. And I think the 15 exahash is not about growing the hash rate necessarily. It's about improving the efficiency of the fleet that they've got. So they'll remove some of those older machines and probably still be able to sell those machines, because if you can sell them to customers that have got really, really cheap power, you can still make a profit with the S19s. Certainly maybe overseas or something like that. You may be able to get, countries like Africa. But every tile on that presentation slide there is effectively a good news story from about March this year. So I don't think any of the mining companies come out with as many good news stories in a short space of time that Core Scientific with them.
Yeah, I would agree that just a jam-packed schedule. And a question directed at myself from Robert, talking about, do you think more miners should follow CleanSpark's playbook of just upgrading their existing fleet? You just alluded to that, Anthony. Core Scientific is, I think, for sure, every miner that has the financial...
Hive Digital is another one. They haven't grown hash rate. What they've done is they've replaced mining machines.
Yeah.
And so they're you look at these mining companies now. We actually, if you go to our website and look at the summary tables there for all the miners, we actually have, and actually on each, we have a page for each mining company with all their metrics. And we have the fleet efficiency of all the mining companies as at July on the website at the moment. So they've all been ratified. And you look at CleanSpark with the highest efficiency of all the mining companies at 22.89, something around that figure. But there's quite a few miners now in the 24 joules per terahash. So you look at the likes of IREN, look at Hive Digital, you look at Core Scientific, Marathon, Riot, there's a lot of miners playing catch up, and these companies I've just been speaking to now are getting a lot more mining machines in this year and next year as they grow massively their hash rates. That efficiency will come down. So next year we won't be talking about 20s, we'll be talking about teens. We'll be talking about the 16, 17, 18 joules a terahash. And what does that mean for miners? It means it's cheaper to mine Bitcoin. If you've got a machine that's operating at 15 joules a terahash, the latest S21, and you're comparing that to an S19, then it's more than twice as cheap to mine one Bitcoin using the S21, because it's that much more efficient to utilize the power usage, and you get more from your power than you would do with an S19. So it's literally, you could say, if your S19s were costing you, say, 30,000 to mine a Bitcoin, the S21s would be costing you half that, 15,000 to mine a Bitcoin.
Yeah, there you have it. So in short, yes, I do think all miners should follow suit if they can. It's just a matter of if you have the money to be able to afford these newest machines up front.
That's the $64 question. You've got to have the money to pay for them. Yeah.
Yeah. Now, if we go over to Riot, Anthony, on the other end of the spectrum from Core Scientific, they're making significant strides towards their Corsicana facility. So we were lucky enough to go down here when building A2 was just being complete. The way to look at this picture, you guys, that long building is all considered A. It's broken into two halves, A1, A2. In the center of the building, there's a walk-through corridor where there's no mining equipment. This is fully immersion facility. All those vertical, I guess, rectangles on the exterior of the building, those are V-block coolers. So those are actually used to cool the immersion fluid. And they've upgraded and integrated learnings from each one of these buildings as they move through. So B1 is the, I guess, the half as long building there in the center. That one is looking almost complete, Anthony. This is actually from their presentation deck. So this is a few weeks old. You can see the substation. You can see the water collection pond that they built on site there. So Riot is taking a different approach, and they're saying, hey, similar to CleanSpark, we're going to really just invest in what we know here. We've got a facility. You've alluded to multiple times, Anthony. They've got this one location, which we see as a big competitive advantage in terms of building out their facility, their own substation that's fully controlled by the company. They also get, obviously, the benefits of curtailment in these hot summer months in Texas. So there's a lot going on at Riot. Do you agree with this pure play approach?
Time will tell. I mean, as I said to you, if a fraction of these analysts are right, the technical analysts are right, and the Bitcoin price going up, and even the likes of Adrian, who does the spaces with DR on X, I think he articulated that. I think it was like October. He wouldn't surprise him if the Bitcoin price was going up in sort of 5,000-10,000 a week, as it started to rise, and he wouldn't be totally surprised that was happening. So again, it's all about where the Bitcoin price is, and I just I have to listen to these other people because I can't. There's no way I can predict it. I mean, I would have assumed we would have still been a little bit green this week, but we didn't. I said before, A-Trade, who's on X, is definitely worth a follow. He predicted on Sunday that the Bitcoin price would pull back this week, and then it'll start to move upwards again. So he's absolutely right up to now on that prediction. From what I gather, there's a lot of I would say it's like gambling in terms of people are putting in longs and shorts in terms of the Bitcoin price, and there was a lot of liquidations for the those that were on longs at the $59,000 level, and there was equally a lot at sort of, I think it was the 69,000. So Bitcoin had a chance to go to one of those targets, and you'd have had a number of liquidations. So it's obviously pulled back and liquidated. I think there was more liquidations at the 59,000 level than there were if it was gone up. So people were generally thinking it was going to, in terms of gambling, it was going to pull back. And so this is what I don't like about the Bitcoin price. It's people are constantly, having positions on the price, and so that can equally have an impact on the Bitcoin price as well. The volatility and that sort of level of gambling in terms of where they foresee the Bitcoin price going.
Yeah. Yeah, definitely good point, Anthony. We traditionally are long and long hold investors. We're not doing the swing trades, the day trades. One question, though, that was asked earlier in the presentation, both you and I have said, Anthony, this is a make or break year for Riot. I'll go first, and then maybe you can add to my point. Where I'm coming from with this, and the story that I've heard from Jason and team through the tour and discussions on our podcast is really, they've taken the time up front to invest in this facility, this world-class facility, which they feel, based on the immersion, the scale, the size, the location, the infrastructure, has the ability to be a one of a kind in the world. As a result of that, though, they've incurred a lot of costs up front. As you've talked about, Anthony, 75,000 truckloads of dirt coming out of this facility. Every single drop of rainwater is collected into that pool. You see, you guys, long lead time items like the power infrastructure you see in the bottom right of the screen. So they've invested a lot in this up front. Their production numbers, Anthony, for me, have been subpar for quite some time. There's been issues with operations. Obviously, their stock-based compensation has been high based on stock price performance, or relatively speaking. So for you and I, going to Corsicana, seeing this facility for ourselves in front of our own eyes, I use the term seeing is believing. I now understand why those costs are incurred. I understand the vision. I see the end product. I feel confident in these targets. So for me, this year represents a make or break, because I think if they're not able to deliver on this grand scheme Corsicana, then really what was all this investment and time worth, or working for in the big picture here? So personally, I think they will achieve these targets. I think Corsicana will be a beacon in the industry. We had Rosso on the channel. He gave some comments in relation to Riot's immersion technology, saying it got a passing grade from Rosso, and obviously they have very high standards. So I think this will really come to fruition in a big way this year as we see Bitcoin price rebound, and this could be a really big opportunity for investors.
Yeah, no, I agree. I mean, there's a lot of capital being spent on that site because it's immersion cooling. It's a lot more expensive than producing air-cooled facilities. And the benefit of the immersion cooling, obviously, is that you can get the heat dissipation from these mining machines. They get extremely hot. And bear in mind, these machines are in Texas, and the weather in Texas at the moment can be like 50 degrees every day. We got there in June, and it was I felt it was hot. It was 88 degrees. I was glad that we were sort of like in there, air conditioning for the majority of the time that we were in sort of Dallas and the surrounding areas. But the team that were there was saying, "Hang on, guys, this is just this isn't a hot day today. This is a milder day." So the immersion cooling, if they've got the right system in place. And when we see the results start to come out, when all these buildings are complete, and like I say, that third building B1 is far more along the lines now than that pitch suggests there. You can also see that they're starting the markings for the fourth building, so they've got to effectively complete that fourth building by the end of the year, and the buildings to the top of these facilities. That's where all the mining machines arrive. So when they come onto the site, they'll go into like the supply area there, and then they'll go through supply and get actually shipped out to the relevant building that they're going to go to. So they've got quite a good system in place. The shifts that the contractors are working is effectively around the clock. So they've got effectively 24/7 people on site doing this. And they've learned from building the first building how to do things better with buildings 2, 3, and 4 in terms of how they're going to go. So they'll get the shell up on that building first when building B2 is, and then they'll do the foundation once the shell's up there. Because as they move into sort of like the season where it's more likely to rain, once you've got the shell of the building, you can continue working when it's raining. So that's the benefit
that was
there.
Actually a learning while we were there, Anthony.
Yeah.
They said they used to pour the concrete first, then put up the shell. But they learned actually based on the rain, you don't want to do that. Now, I also wanted to get your take on the block acquisition here, Anthony. This is another major story in relation to Riot. We just had a comment saying we're a Bitcoin mining channel, but we don't give the pure play miners any love. So we'll give Riot a little extra love today. They obviously have aggressive targets similar to CleanSpark, M&A, organic growth, miner replacements, all on the roadmap for each one of these companies. But Riot's acquisition, definitely a major one or a notable one this year, hey?
Yeah, so I got to meet the Block team actually in Nashville. So I got invited to an investor session with Jason and the Wall Street guys, and the team from Block were there. So when they purchased Block, the team became part of the Riot team. So all the employees were kept on. I got a chance to physically meet the CEO and some of his senior team and asked them quite a few questions about, before Riot had finally made the bid, what was there other interest? And they said there was other interest. For them, it was a great deal. And we said this before, some of the smaller miners just will have difficulty raising that level of capital to grow from where they are. So, I keep saying there's a number of miners that can, and there's a number of miners that can't. And it's sort of like, if you look at the number of miners that I cover, you can sort of say 8 or 9 of them are in that can, and then you've probably got 6 or 7 that are in the ones that, will struggle to grow anywhere near the level of those top there. I mean, we talk about Riot, Bitfarms, Marathon. We're talking about, growing hash rate 2 or 3 exahash a month. I'll be interesting. I mean, in 20 minutes time, it's going to be the IREN call. And therefore it'd be interesting to see what their earnings call and whether they give some sort of like update on what they've brought in terms of hash rate for where they are currently, as some sort of like a good news story while they're issuing their results, which may or may not be as good as the market expects them. And so, it's about getting this hash rate right. I've said all along, Riot will get their hash rate this year. 36 is their target. This will deliver about 5 of that target, and the other 31 will come from Corsicana and Rockdale. So at Rockdale, they've got about 4 exahash where they're going to replace machines for more efficient machines. So that will mean actually more hash rate. So they'll take out 4 exahash and they'll put in machines that will deliver more exahash from Rockdale. Then you've got the Corsicana site, which we know half of it's already completed, up and running. The other buildings, B1, will probably energize in the next month or 2. And then you've just got the last building to deliver there. And that will be delivered by the end of the year. Absolutely. And that will be all immersion cooled machines there. So they've sort of like got 3 pronged attack here to get to that 36. But I fully expect them to do it. If I was to say out the 5 big miners who's not going to achieve their target, Riot won't be in that group. I think Riot will achieve their target. I expect IREN to achieve their target. I'm hopefully going to hear something from Dan today to say how that's coming on, because they've only got sort of 4.5 weeks now.
Yeah, let's get on to IREN. Let's get on to IREN, Anthony, because we actually had a question about their power rates anyways. And like you say,
so IREN have got to get to 20 exahash by the end of September, and they're at 10.5 at the moment. So and the question there is obviously we'll hear more today. So they acknowledge the fact that they've done a hedge against the power cost, but it was actually quite a high hedge price. Some guys in the industry have done some reverse engineering on that, and they came up with the fact that they must have gone in somewhere between 11.5 and 12 cents a kilowatt hour, which is significantly high. If you think about the slide that TeraWulf put on before, their site at Lake Mariner's achieving 4 cents a kilowatt hour, and if IREN did a hedge nearly 3 times that amount, what they're doing is obviously there's a reason why they did that, and in Texas, when the temperature gets high and demand gets high, that the price can really spike. And last year they must have done something very similar, and it really benefited from them. When the power price goes high, if you've got a hedge against power, it means you can actually sell your the hedge back to back, and you'll benefit from that. And last year, I think for the month of July, they effectively didn't have to pay any power for their mining. So what worked last year, I think they were trying to replicate this year, and it just didn't work out. The energy, the weather didn't get to the stage where people were having to switch off as much, and the pricing got nowhere near where everyone was expecting it to get to. And so therefore, when you then got a power cost of 11.5 to 12 cents, you're paying for that. You're paying to mine. And when their prices came out for the price of Bitcoin, TeraWulf came out at 36,000 and IRENs came out at 66,000 to mine a Bitcoin. So there's like a 30,000 difference between the two. And generally, they're a lot closer in terms of the price. So it did really affect July. We've yet to see. I think August there has been some spikes in power. So we did see the power price rise. Has it risen enough to give them enough back to make it worthwhile? Time will tell. We're only a few days from the end of the month, so we'll get that monthly update in a week or so's time. But Dan might be able to give a little bit more color to that conversation today, a bit more color to their hash rate growth. They've got a massive growth target to get to by the end of September, and bear in mind 20 exahash was their original end of year target, and even then it was a challenge to get to 20. Now that target is 30. Now they're on one site like Riot. So again, we've seen the updates from IREN to say that the buildings are coming along line. We get the photographs, and so you can see more and more buildings up there. And I agree. I think they'll get their target by the end of the year because they've got over 350 employees working on site, delivering those buildings. And again, it's like the lessons learned. These are smaller buildings than the Riot ones. These are like 20, 25 megawatt buildings, but they need to do a lot of them. There's probably about 15 or 16 that they need to build. And so to deliver that level of power required to get to the target. But Dan will give us an update today. We've got Dan coming on the podcast next week, so that'll be a good time.
I was going to say we've got him coming up soon, and those are generally pretty strong podcasts. Now, Anthony, I wanted to get your take on another angle here with IREN. We've got 90 people in the stream right now. You guys, please, if you could, hit the like button. It does take a lot of effort to put the deck together, and it really does help get this out to more people who maybe can sample our channel and watch our content. So appreciate that. We've got about 15 minutes left, so we wanted to get through a few more companies. I wanted to get your take on this. So Anthony, they specifically referenced HPC team hires in their most recent presentation, a long list of engineers, technicians, managers, all related to high performance computing. IREN is among TeraWulf as really one of those companies we feel may be coming out with an announcement sooner rather than later. This is really supporting that. They've also got the poolside deal. That's small scale relative to some of the bigger deals we've seen, Core Scientific, CoreWeave. Do you think we're going to get something big out of IREN in the immediate future?
We hope so. They've got a couple of clients at the moment, but in terms of revenues, they're sort of on a par with their Hive Digital. They're generating about $1 million, slightly more than $1 million a month. So annualized, maybe 12, 13 million a year at the moment. Now, this is quite clearly the difference between Bitcoin mining and HPC AI business, in the fact that Bitcoin mining, you don't need a marketing department, you don't need a sales department, you don't have to collect any money or pay bills to anyone like that. But with HPC, you've got to do everything. You've got to be able to deliver your service, you've got to be able to sell your service, you've got to keep your clients on side all the time. You've got to make sure that the systems are up and running. You've got to be able to market your business as well. So a lot more staffing. Where we said the energy price is really low, you need a lot more staffing, and this is one of the reasons I think that and actually articulated quite well. If you try and dig out Zach Bradford did a recent interview, and he was asked this absolute same question about why they've not gone down the HPC route, and this is one of the reasons why they want to be great at what they do, in the same way Jason said for Riot. But the other reason is that you've got to start managing a lot more different parts of the business, because You know, Bitcoin mining does itself. You know, you put the machines in, it mines. End of. You're not going to worry about anything else after that. You know, you can, yes, you've got them. The machines will are monitored, and they've got this software now that they can look at every machine. We've seen it in action. You can see when a machine's not working optimally. You can go and change the machine. This is a whole different beast. This is a proper business where you've got to manage the business, manage the client, manage the expectation, conversations, and all that. Are you going to get paid? You know, is your client solvent? Are you going to get paid next month? You're spending millions and millions of dollars, so there is a little bit more involved, a little bit more risk initially. I think with that contract, with we keep going back to the CoreWeave contract. That's slightly different from this here because that's a big contract. So you know what you've got to deliver. You've got a client. It's one client delivering a service. So that's a bit more manageable than, you know, you might have a HPC business where you're managing 20 clients who all want 5 megawatts each, you know, and so that's not the CoreWeave deal. That's having lots of different, you know, relationships with every one of them, and people dealing with those, managing it on a daily basis, and a lot more, you know, a lot more involved. And I think Zach, listen to Zach, I think he articulated it quite well. And you want to articulate it quite well because you're deciding not to go into this space. I mean, time will tell when we start seeing those real revenues coming through the core scientific earnings. That's when things are going to sort of like say, well, actually, this is real now. This is, you know, they've taught the talk, now they're delivering it. And so, you know, in 3 or 4 months' time, we'll start seeing those revenues come through.
Yeah, it should be exciting. Now, a couple more miners we wanted to get through today, Anthony. One of them is Hut 8. So I'll bring up Hut 8 on the screen here in a second. We just had Asher and Sue on the program as well recently, talking about some of the opportunities they see in front of this company. They put out a deck in combination with their most recent earnings, and I'll bring it up on the screen so everyone can see here. This was put out on the company corporate X account as well, talking about the platform itself, the power pipeline, the digital infrastructure, the compute, really breaking it down into those 3 layers, and then talking about that vertical integration with the comments from Asher on the right here. This was a company, kind of reminds me of an onion, Anthony. There's a lot of different layers to this company, a lot of different angles to think about. Asher also said the CFO, Mike Ho, has been doing some really cool things with options and futures trading on Bitcoin, generating some good yields and returns there. So Hut 8 Corp, one we've followed for quite some time on the channel, really starting to put the pieces of the puzzle together.
Yeah, I mean, we you know, Hut 8 were you know, in terms of popularity in 2021, they were up there. They were one of the most popular miners, and they, you know, at that point in time, they had a, you know, commensurate hash rate compared to the other miners in the space. They then moved into sort of like the Ethereum mining and benefited from that with the high margins there. And if you look at that sort of like that and actually even go back further, they hosted a lot of miners, so they were a host miner. So as the years have gone by, they've got rid of the hosting business. They felt that wasn't a profitable space. They haven't really renewed the machines that they've got in terms of self-mining. That self-mining hash rate there of 4.8 is one of the lowest fleet efficiencies of all the miners that we look at. So I think it's just over 31 joules per terahash. Now we talked about, you know, CleanSpark at 22.89. That means that effectively CleanSpark are paying somewhere like, you know, a third less in terms of power per machine than Hut are paying. So it makes a big difference when you're mining Bitcoin. You want to keep the costs down. We talked about, you know, have the most efficient fleets, and also have the lowest power. Now, one thing that Hut have benefited from, and probably more so than CleanSpark, is actually their power cost has come down considerably. I think Asher indicated it was 3.2 cents a kilowatt hour, which is effectively one of the cheapest. I mean, I think you only got like CIFR, who can sort of like, and Soluna, who can sort of like get close to that. Even the TeraWulf, and they've got a cheap energy price, isn't as good as that price there. So maybe they're
surprising, hey Anthony? I think
maybe their price is obviously helping them a little bit at the moment, but I think shareholders, myself included, we want to understand more about are they going to take the self mining seriously and generate get some new machines in there. Ash just talked about when the price is right, he'll go in and buy. He's expecting the price to come down further. The price in 2021 for miners, then when the S19s came out and they were sort of, I don't know, $25 to $30 a terahash, went up to $80-90 a terahash by the end of 2021. So we've seen these miners paying $14 a terahash for the S21s early in the year, but we know that price isn't available now. They're paying sort of like $16 upwards now. Does that mean as more orders are placed, the price goes up? So time will tell. But I'll say Hut have got their fingers in so many other pies that they're the self mining is really a very small part of their business effectively now. So you look at what they've got in terms of owned megawatts and managed megawatts. So they've got over 1 gigawatt of owned power of their facilities, and to that 4.8 exahash will only be taking up something like 10% of that power effectively. So if they can come out with like a HPC deal, then again it's going to be a significant play for Hut 8. And I think the good thing about Asher is he's looking at every segment of the business and seeing how he can bring in change and also reduce costs. I think he was very much focused on the costs since he's been in charge, and that seems to have worked. They put out reasonably good results in comparison to other miners for their Q2s. They had very good Q1, but everyone that had a hodl in Q1 really benefited from the change in the rules. But Q2 was fine. If you look at their 6-month position for this year, it was probably as good as everybody else's. So Q3 is where he said, I want to be marked on my performance in Q3. Hopefully you'll see what I've delivered by then. So we're in Q3 now. Let's see what he delivers in the next month or so.
Yeah, most definitely. You talk about that $80-90 per terahash pricing. That's what I was referring to earlier. When we start to see this bull run in Bitcoin price, the value of these fleets just goes up exponentially, which is going to be also very exciting for these pure play miners. Now, the final one we wanted to touch on today, Anthony, we just got a message about them, SATO Technologies. We actually are doing the live Q2 podcast with Romain and team tomorrow, 8 a.m. Mountain Time, 10 a.m. Eastern. This is going to be really interesting. They just came out with their Q2 numbers today. Romain's coming on the channel. He's going to do a live Q&A after the earnings presentation. This is the actual corporate earnings presentation that was linked or referenced in their PR today as well. So I wanted to get your take not only on the numbers, but where you see some of the smaller miners going here in the next few months.
Yeah, I mean, the challenge is obviously the halving occurred in April, and with these smaller miners who've not been able to grow hash rate. So in terms of SATO's hash rate, it's been pretty much consistent around about half an exahash since we've been covering them, and that goes back to before 2024 as well. And they also had a problem in June. They had I think a fire which affected about 10 or 15% of their facility, and therefore affected some of the miners in that space. So they're now operating at probably closer to 0.4 exahash. And I would imagine some of the costs occurred in June when that incident happened, so that would have affected some of the actual operating costs for that period. And we'll probably put that question to Romain tomorrow. But generally, they again, they're a well-run company. They're a small company. They're well-run. They've got good cash flow. They keep their costs down. They don't pay themselves exorbitant salaries or issue massive amounts of stock compensation. And even if you went by percentage, yes, they are one of the smaller miners. But if you did a percentage, it would be, not nowhere near comparable to some of the 3 or 4 big miners who are effectively, paying out sort of ridiculous sums of stock compensation. And so this is a smaller miner, but it's where can SATO and some of these other small miners get to, by the end of this year, by the end of next year? What's their opportunity to grow? It's just the challenge is raising capital for these miners. So there are a couple of levers they can do. They can go to the debt markets, which for Bitcoin mining at the moment is a challenge because the interest rates are going to be quite high. Those that are operating or going to be operating in the HPC space, so, the likes of CORZ Scientific, and if TeraWulf go down that route, they're going to get cheaper debt than the likes of SATO. So SATO, that's one area they probably can't. Then you've got the option of like, well, do we use, sell shares at the market? Whenever a company sells shares, and I don't know if SATO have got an ATM in place or they have to go to the market with what they call a dilution. So they inform the market they're going to dilute some shares, and the market automatically changes or re-rates the pricing based on the dilution. So that takes the share price down because you're now effectively having, say you had 100 shares and it was worth $100 or $120, and now you've got 120 shares. The value of the company is still $120. It means the share price effectively drops to sort of like from $1.20 down to $1 because you've diluted by that 20%. So that's what would happen if they went for a dilution. The share price would automatically re-rate to the diluted value. So that's not great because shareholders want to maintain value in the company, and if you dilute, it means that their value in the company gets reduced. Then they've got the option to sell Bitcoin. Now they do have, I think it's about 40, 50 Bitcoin in their treasury. So they've got a bit of Bitcoin there. And if you look at the numbers there, they had about I think got about 5 million in working capital or sort of like treasury at the end of June there. So 4 to 5 million is what they've had available over the last few months in terms of available Bitcoin cash within their treasury that they've got, to use that in an opportune way. But we've just articulated at the start of this podcast how much does $11 million buy you, and at the moment that probably buys you about 0.7 exahash. Now if they've got 4 or 5 million, that's less than half that amount. That gives them, say, 0.3 exahash of mining machines with all the cash that they've got at the moment, including their Bitcoin. And that gets them, say, from 0.5 to 0.8 exahash. So, growth is going to be a challenge. The opportunities, is there more opportunities in HPC? So that's the sort of question we need to be asking Remain tomorrow. Is it a case of 2025 is going to be along the lines of 2024? Unless the Bitcoin price rallies, gives them more revenues so that they can use that revenues to grow in a direction that they feel will give them the best return. So it's going to be interesting. But for a company of their size, the results are very good actually. They made a loss of just under $1 million, but actually when you look at the unrealized losses in Bitcoin value, depreciation, stock compensation, all those sort of like non-cash items, they actually had a positive cash flow. So it was still a reasonably good update.
Yeah, I thought so as well. And it will be interesting with Romain tomorrow to talk about the HPC opportunity for some of these smaller miners. You're right, Anthony. They can grow even 100% a year, 200% a year, but it would still take a considerable amount of time to get up to the levels we've seen with some of those companies that were able to leverage the ATM. Now, final slide today, Anthony, kind of a fun one for us. Talking about predictions, Crypto Rover came out saying, hey, historically, this is what we've seen going into September, a couple days away still. Not looking great historically in terms of Bitcoin return in the month of September. The other thing I observed on here, even the most bullish years, the bottom row there, 2013, and I believe the second from the top, 2023, still had 3 out of 12 months where Bitcoin was down. So I wanted to just reassure people, it looks like we're selling off, continuing to sell off throughout the trading day here on the Bitcoin miners. Volatility is inherent in this business, you guys. This is part of the game. I would not worry. I would not sell. I would not change your thesis. It's just part of the fun. So again, not financial advice, but these are maybe the days it's best not even to look at the phone. Anthony, in terms of longer term prediction here, cyclicality, history repeating itself, do you think September green, red, indifferent, no way to tell?
I've no idea.
No idea. Yeah.
No idea. As I say, we don't do predictions on Bitcoin price. We're you know, I just hope it looks like so. Again, if I'm looking at analyzing this very quickly, I'd be looking at 2020. I'd be looking at 2016. And just seeing when the last halvings were. If you look there from October, November, December of those periods, it was like green each of those months. So that suggests we could have, you know, green months towards the end of the year. 3 green months would be good if we have, you know, an indifferent month of September. August, I'm assuming August will be, because it's gone down today, and depends when this this tweet came out this morning. I mean, it's still, that's going to probably drop a little bit further than 0.68%. But who knows? I think you might have. I'm assuming 3 of the 4 months towards the end of the year will be green, because there's too many people out there that are suggesting the price will get to 100,000. Bear in mind, in 2021, a certain Plan B was suggesting we get to 100,000, and we got to 69,000. So, and he had the stock to flow diagram, which everyone was buying into. So it's really difficult to predict going forward. I take my hat off to the guys. As I say, I'm not a technical analyst. I like looking at fundamentals, real numbers, and you can sort of like understand whether the company can still, you know, manage going forward. So, you know, I'm more than happy to suggest that, you know, some miners have got real potential going forwards, and we don't, you know, think, like we've mentioned, the likes of Core Scientific, like Bitdeer, like Bit Digital, like Hut. They've got some potential because of the power. CIFR mining, another one that's got real potential. We like TeraWulf with the low power and potential announcement there. So, you know, fundamentally, we can tell a story about these mining companies. But on the Bitcoin price, I've never gambled on the Bitcoin price. I've never put any of these option trades in about the Bitcoin price, and nor will I. I just haven't. You know, I take my hat off to the guys that do it. Let them, you know, let them focus on it. They seem to have a little bit of understanding. There are some good guys out there. We've had Freedom on a couple of times, and you know, he's got a really good following in the space.
Sure.
Maybe on a Wednesday we need to just get an update from Freedom before we come on, so we can just get his Bitcoin slide and include that in our slide deck, just so that we give people a bit of a you know, something to look forward to. Because I know today it's obviously with the price today it's a bit red, but I as I say, I'm just switch off some days from the price. Don't keep looking at the price.
Now, Anthony,
it can go down 3 or 4%, but it can fly up 20%, 30% in a day, 50% in a day, some of these shares. So, you know, it doesn't take much. Sentiment can change really quickly.
It sure can. That was going to be my point. 2 other boxes to look at here, you guys. If you look at the averages along the bottom, Anthony, probably your keen accounting eye can point out where I'm going there. Connections fluttering too again, Anthony. Averages for October, November. So average monthly gain in October over these years is 23%. Average monthly gain in November over these years is 47. Now, Anthony, you talk about rapid price movement. If you look at November of 2013, it was a 450% improvement that month. So that's obviously skewing that average up for November column. However, if you exclude that, or if you look at October, which doesn't have any of those real anomaly cases, we are traditionally going into a very strong part of the year for Bitcoin, not to mention election, not to mention the supply and demand ratios, ETF buying, all of the other bullish factors we've talked about, policy, legislation. It is traditionally the best time of the year for Bitcoin, hey?
Yeah, no, absolutely. Yeah, it's got, as I say, it looks like I still looking at that there overall, October looks like pretty much a green month every year, and so does November. To be honest with you, so it wouldn't surprise me if we have like a run of green towards the end of the year.
Great. Yeah, no, it should be good. All indicators are moving forward. Anthony, we're at 97 viewers now, as many as we've had all day. Do you have a few more questions in you, or are you tapping out? We're over the 2-hour limit here. How are you feeling over there? You got another few in you or no more?
I will do 2 more questions if there's 2 more questions, and I'm ready to go, because I think 2 hours is a long time for these live ones. Yeah.
Sure. We'll do one last one that came up. I wanted to throw in CIFR. We've had a few questions about them, Anthony. They had Tyler inaugural on the channel this month, first time on the channel. And they've come out with some big news as well. Just recently here, you referred to this earlier in the presentation, announcing a big acquisition. So maybe we can end off here. If everyone can hit the like button, we'll end off on a positive note for CIFR Mining.
Yeah. So yeah, we had Tyler on the channel, and he articulated they had a significant amount of sites that they were going to sort of position for HPC. Obviously, this is a new news story, so he didn't mention this particular site. Obviously, it was probably something in the front of his mind when he was doing that podcast. But yeah, they've announced this, a site 300 megawatts for a payment of 67.5 million, and it's $3 per megawatt hour for the 5 years after when it's energized. So a good low rate of energy cost. And so it'd be interesting to see what they can position us. I mean, they're looking at the opportunity to build HPC infrastructure. I mean, I asked him the question about would he even consider moving the Black Pearl site, which is due to come online next year with a massive amount of hash rate. Could he repurpose that as a HPC? And he said absolutely. So he's sort of like fully focused on whichever will deliver the business, and not just the fact he wants to be a pure play. It looks like he realizes some of the benefits of this HPC space. He's got cheap power, which will appeal to both industries. Both industries use a lot of power, and the Bitcoin mining industry uses a lot more power in terms of percentage of the Bitcoin price to mine a Bitcoin. But don't underestimate the amount of power required for HPC. It's a significant amount. So, but yeah, it's another good update. But again, these sites will need to be built, and that's going to take time. And so, it'll be interesting. I mean, the Black Pearl one comes online next year. We've been talking about Black Pearl for over 12 months. So, don't have any illusions that some of these sites take 6 months. You're looking at 18 months, 2 years for some of these sites to be developed. He talked about those 4 sites. I think there was a 200 megawatt site and 3 500 megawatt sites that they were acquiring potentially for HPC. And he talked about 2027. So he was already thinking 2 to 3 years ahead from where we are today. And, the same from IREN on some of their sites that they haven't started yet. If they start to look at these other sites they've got, the development of those sites is going to take at least 2 years from when the shovel goes in to break ground.
Yeah. No, a good point, Anthony. So in closing here, you guys, I just wanted to remind you of Bitcoin Amsterdam. Also, I wanted to mention that we've got SATO Q2 earnings coming up on the channel tomorrow, 8 a.m. Mountain Time, 10 a.m. Eastern. Get your questions in for Romain and team. Again, one of the smaller miners putting up strong numbers. We're going to be questioning them on HPC strategy and discussing some of those earnings highlights. Anthony, appreciate the time today. 2 hours and 12 minutes, you guys. So obviously a lot of effort, preparation, planning goes into this. We'd appreciate a like, comment, share, whatever you can do to support the channel. If you have any additional questions we weren't able to get to, feel free to leave them in the comment section below. Anthony, I think we did about 18 questions today. So well done. you've earned yourself a nice sleep tonight, and we'll be back here tomorrow bright and early with Romain and SATO Technology.